Good morning. We are live. It is Monday, 13th of April, and the portfolio it's back up in the green, albeit quite slightly. Right. I think this is rather surprising with the developments that we have had over the weekend. Now, I have this unconfirmed piece of news that I just saw someone retweet on X or reposted on X about Iran potentially considering taking uranium enrichment off the table. That could be why markets uh, are, are up today. Let's take a look at the sticks while we wait for people to come in. Good morning, good morning. Welcome, everybody. Thank you for the 11 of you who are here. The portfolio is back in the green finally. And what is primarily driving that growth? I can't remember where we left off on Friday. I think we wanted to buy a couple of leaps on the portfolio. I can't remember whether I did that on stream or whether the price points actually got filled. So we are going to go through some of that. We're going to go through some of the moves we are looking to make in the portfolio in the next couple of weeks. Actually, majority of our capital has been allocated by now. I think right now we know that Tom Lee's point of view is that the bottom is in. Recently, or actually this morning, we just got a Morgan Stanley analyst come out to say that he feels that the bottom is in as well. We'll be listening to that later on. And if indeed the bottom is in, then I think we played this relatively well. I think we probably have only around 20% of the cash outstanding right now on basically not allocated into stocks at the moment. And so that's a pretty healthy position to be at this point in time, where we don't want to aggressively buy the dip, but we do want to have some capital on hand to be able to maneuver the entire situation. Right. Good morning. Good morning. Welcome to the 12 of you over here. All right, let's get started. Okay, if you take a look with me today, let me adjust my screen. All right, what do we have? Okay, so the S&P is actually barely flat. Again, still worried about this gap fill over here or potential gap fill over here. I have no rational reasons for this other than I feel quite uncomfortable with having this big gap over here. But again, we kind of had this big gap between 560 to 570. This 10 points gap. Technically, we closed half of it, right? So I just want to talk about this potential gap fill. It's not a very big gap fill. It's around also around the 11-point gap, similar to what we had last year, right? That 10-point gap, and I think we might not see a complete fill, but I wouldn't be surprised to see somewhat of a retest, partial fill, and then we rebounds from there, especially if we see some sort of light at the end of the tunnel. But S&P practically flat on day, 0.33%. NASDAQ also flat, 0.06%. The Dow Jones, however, is down. That is down 0.4%. Right, so we are seeing a little bit of a rebound on the VIX today. It's up around 3%. But ultimately it is still it has still broken that uptrend it has been on for the last couple of weeks, and we hope that it remains in this new range over here around 19 or so, in the high teens, 20s. And then as the conflict actually eases out, we can see this basically go back down into the low teens. So I hope all of your portfolio is doing well today. If you have positions that you want to sell covered calls on, this might be a good time to consider doing that. That is exactly what we are going to be talking about later on when we look at the portfolio. And at the same time, I also want to point out that Bitmine has actually reached a 4% ownership of outstanding circulating Ethereum. So that is indeed a milestone for them. And I think that is something that they are happy about. As investors, we should be happy about as well. They are still buying Ethereum at around a 71,000 pace. So that's pretty good. Right, so if we jump into the portfolio, you can see SoFi today is up 2.5%. Again, a lot of these moves up, right? I think it's a good breather for the markets, but I personally do not think that we have recaptured any sort of significant support lines. So I am still a little bit wary because you can take a look at what's happening with SoFi right now. Although they are up 2.5%, they are basically still bouncing off the 6.618. For Bitmine, it's a slightly different story. You can see we have been forming a pretty solid base over here. Wouldn't be surprised for us to actually see this base continue to build out for the next couple of weeks as the price movement of Ethereum slowly builds up as well. I think over the weekend we saw Ethereum at around $2,300-$2,400 before all of the breakdown of negotiations, right? So that tells us actually that if we see a slightly positive end to things, right? I think Ethereum could run easily to past that 2,500 level. And with that, Bitmine can also at least retest the first level over here, which is around $28, $27, and possibly even $35, right? And I think this is where, in this range, I think that's where most of us have our our cost basis. So I think it'll feel a lot more comfortable on your portfolio once Bitmine returns to this region. But then we still have a long way to go to recapture the highs of where we were in 2025. Now, Amazon, this is a fantastic opportunity, right? In the low 200s, and then right now we are at 236. So people who have gotten into Amazon should be pretty happy over here. This is just a small pullback, nothing to be too concerned about. Again, small gap over here, might be closed, not very sure, right? I think Amazon basically trades in line with the market. So whatever happens in the market, I'm expecting to happen with Amazon as well. Zeta Global, more of the same. I think it is pretty bullish that we have gotten a bounce in this region around 1450 for the last couple of weeks, quite a few times. If you take a look, this line has held pretty well over here. So if this can form some sort of near-term support for Zeta, and let them form a strong base before rebouncing. Sorry, I think that's actually a good thing for them, right? I think Zeta is a name where I think on the surface, really, it does seem like one of those hype companies or meme companies that are popular in FinTweet. But actually, when you take a look at the fundamentals, when you understand the business, the mode that they have, there is something there. Again, because of the options chain, not entirely convinced to open that big of a position. 5 to 10% of this portfolio is fine for me. Now, ETH, nothing much to say over here. This basically mirrors the price of Ethereum. So actually, let's take a look at the price of Bitcoin and Ethereum. So Bitcoin, again, 72,000, right? I think this is relatively mild, the movement that we are seeing, which is perfectly fine. I think we need Bitcoin and Ethereum to form a pretty solid base over here. So what we are seeing is that the 50-day moving average is having a slight tick up, and basically Bitcoin is moving along the 50-day moving average, similar to what Ethereum is doing. You can see Ethereum went all the way up 2,300 and then came back down again, but again still holding above the 50-day moving average, and 50-day moving average is inflecting back upwards. I think last week that inflection wasn't as obvious. We can see this right now, that there is a slight inflection upwards, which tells us that perhaps the near-term trend might be turning. If let's take a look at the 20-day. Do I have the 20-day moving average? 20-day is my M3 over here. So you can see the 20-day moving average, similarly, which is this pink line over here, has also, I mean, it's not much, yeah, it's crossed over the 50-day, but I mean, generally trending in the same direction. I don't really use the 20-day for myself because it's a little bit too short of a timeline for the way I look at companies. Okay, back to the rest of the portfolio. And then we have Robinhood again. We got in at around 70. We actually came all the way down to 67, and then we are bouncing back up again. I think the markets are green because there seems to be some talk around potentially Iran considering not actually enriching uranium, and that I think there was a post on X basically saying that. Let me see if I can find it. If I can find it, let me just pull it up. Okay, let me share my screen over here with you. So it might be regarding news of this. I need to go and find the actual news source, but this was something I just saw on X. Iran weighing end to uranium enrichment in US deal talks. So Iran is reportedly reviewing a US proposal to end the war that would require abandoning uranium enrichment, according to the NYPA and the New York Post reporting. Negotiations in Islamabad were complicated by communication security concerns. So the whole exchange in Pakistan did not end well, not just because negotiations completely fell apart. See, it does seem like negotiations are still ongoing in the background. It's just that they're no longer meeting in Pakistan for now. I presume that, to finalize some of these peace deals or these ceasefire, we are going to have to see them meet again in Islamabad. And I think because of that, because of this is why that might have given markets a little bit of hope, at least starting the week. Right. Again, we do not know how this will play out for the remainder of the week. Trump has been fairly aggressive, talking about blocking the Strait of Hormuz, and Iran has similarly responded in kind by saying that, if you block the Strait of Hormuz, we're going to blow up stuff all around the Gulf states. All right, if it's either safety for all ports or none of the ports are safe. I believe that's what they said. But I think despite the tension, because of news like this coming out, I think that's why the markets are green, which is pretty surprising for me. I actually expected the markets to be red after what happened last weekend, but I guess you never really know. All right. Let me take a look. Okay, so right now, I just want to play you this small clip over here. And this clip basically tells you, basically, this clip talks a little bit about the blockade that we have in the Strait of Hormuz. I'm playing this at 1.25 times speed. So if it's a little bit fast, let me know, okay? Because I think otherwise it's a bit slow moving for the stream.
We do. It's also risky because, of course.
Okay, maybe I just do 0.1.
The mild reaction of markets this morning, I think, reflects an expectation that the fighting is over. But will Iran try to, in one way or the other, attack our naval vessels that are enforcing the blockade? Will it resume attacks on its Persian Gulf neighbors? We don't know that. Is the fighting really over? We don't know that. So if you say to me, President Trump is committed to enforce this blockade however long it takes, then I think it could work. And after all, it's the correct premise, because it's essentially saying it's either open for all or it's closed to all. And the Strait of Hormuz is an international waterway that Iran has no right to control it or impose tolls. But it's going to take patience. Final point, I think it would be smart if the president could get as many other nations to support the blockade in one form or another, because I think that would put more pressure on Iran, especially.
And the UK has already said it won't.
I know, especially China, because China is the nation which reportedly weighed in late but hard on Iran to agree the ceasefire. And China has tremendous influence on Iran. Now, it may not be that China joins some coalition, but on its own track, if we could get China to tell Iran to back off, that would be really helpful.
All right, so you can see, I think right now we are basically in a stalemate, right? Trump wants to block off the Strait of Hormuz, and Iran is threatening to retaliate in kind by attacking surrounding ports in the Gulf states. And it's basically a game of chicken, like who blinks first. Because if you think about it, as Trump blocks off the Strait of Hormuz, yes, ships can come out. They may have to pay a toll to Iran, but they are less likely to pay a toll, because if I'm going to pay you $2 million and I can't even get out because the US Navy is blocking me, then I might not want to pay you $2 million. So that's the first way that it actually hurts what Iran is trying to do. Secondly, at the same time, they are saying that the ships cannot go in. So if ships cannot go in, then basically Iran is basically starved off any sort of supply. My only concern over here is how will the rest of the world, or the rest of basically the rest of the world that uses the Strait of Hormuz actually feel about this. Not that it's any better without the US blocking the way there, right? It's not like if the US wasn't there, they're not going to they are going to transit through the Strait of Hormuz. Nobody is going to transit through the Strait of Hormuz. But I just think that, yeah, it might cause a little bit more tension, especially between US and China. And we know that in May, Trump and Xi Jinping is supposed to be meeting, right? Whether or not that will get pushed away again, that's a completely different, separate issue. And I definitely think that this conflict with Iran is definitely going to be a sticking point. I was actually listening to a video this weekend talk about how uh, it could actually be China just waiting on the sidelines, observing what's happening right now. Because in a sense, this is Iran basically trying out their plan on the US, and they're just basically watching everything unfold. So they really have no incentive to see this end as soon as possible. Good morning, Zeno. Good morning. Right. So if we jump back into the portfolio talk, we'll talk about Bitmine a little bit later. Let's finish the rest of the positions in the portfolio. So if you take a look at the rest of the portfolio, Nvidia is $189. We have we bought a 2028 leap on Nvidia at around $60. So I think that should be doing well today. Doing Grab things. At least right now, we are not falling further. We have again I think a lot of companies that have fallen 20, 30, 40%, or even in Grab's case, around 50% from the highs, or nearly 50% because they reached 660, right? It's basically just down since when was this? Down since September of last year. So we didn't really time it properly in that sense. We actually got in at around 420, but I guess we missed most of the downward trend, so that's perfectly fine. I think a lot of the stocks that we are looking at seem to be forming a base. My concern is that the base that they are forming is not under any sort of strong support. So we just need a little bit of fear to like creep back into the markets, and we can be, going down to test even more lows, which is why at the moment, if you take a look at the portfolio, you can see that the cash position is around 26%. Basically more or less where I like it. The reason why I like 26% is because when I sell cash account puts, I tend to be able to generate a bit more income than covered calls, but at the same time, I want to be mostly allocated into the market. Now, out of this 26%, you have to understand that around half of it is actually collateral that is being tied up in cash account puts that we have open. Actually, I think a bit more than that. If I take a look at the exact number, we have around $26,000 in cash in this account, but we have 2008 tied up over here in Ethereums, which again I feel like I might just have to bite the bullet and buy ETHA at whatever price it is at the end of the week if this doesn't get assigned. Basically, this is also on the $55 puts that Robinhood has. So 2,800 plus 5,500, that is 8,300. And from here, you also have the Zeta 7 cash account puts at $13. So that's 9,100. So 91, yeah. So it's basically around $17,400 out of the total cash that we have on hand that is being allocated to cash account puts. So there's only around $8,000 of cash that is unused, which I am keeping in case United Health drops even further. Because I am actually, when I made the purchase of United Health, I was looking at the fundamentals, and I was looking at the medical loss ratio, what it needs to hit in this upcoming earnings. And basically, I was a little bit too hasty. I noticed the gap up. I didn't notice the gap down. So that's one of the problems that I had getting into United Health. So I am prepared for it to get down, which is why I'm leaving this $8,000 of spare cash in order so that I can average down on this. I'm actually also hoping to add another leap to Nvidia, but I already know that I will add the leap. I wouldn't mind adding the leap at a slightly higher strike price if Nvidia goes up past $200. Otherwise, if it falls back down, I wouldn't mind adding at $180 again. So you can see over here, the Nvidia leap expiring on 15th of December 2028. It's the strike is at $180, right? So this is basically already up 9% since we bought it on Friday. We bought it at $60.10, which is $6,010. And basically, this is around 6,600 right now. United Health, slightly different story. We waited for it to drop last Friday on the daily candle, and it dropped from like 62 down to 59. That's when we made our purchase. But then, because like I said, I was doing the fundamental analysis on the company, I was a bit too focused on the fundamentals. I liked what I was seeing. I mean, I liked it back when it was $250. Liked it at 270, and then I traded it all the way up to 345, 350, something like that. So definitely now at 300, I like it as well. I was looking at what was possible in the upcoming earnings, and then basically that's when I made the purchase. But then I didn't realize, or it didn't occur to me at that point in time, that there was a pretty huge gap down until after I bought it. So that's why last week on stream, I think I was saying that I was thinking whether or not I want to buy it, but I didn't realize I had an open order. It got it got filled, so I ended up buying around here, and then after that, yeah, you basically came all the way. There's a likelihood that it could come all the way down, but as I was saying last Friday as well, I doubt that the entire gaps get filled. It probably gets partially filled before bouncing back up. So that's where I'm waiting to add to my United Health leaps. All right, and then we have Zeta. Zeta, it's perfectly fine. It's right at the sweet spot right now. We need it to be between $13 and $20 by middle of May, right? So I think this is perfectly fine for us. We are in a very good spot. If we want to add more, we can add more and lower our cost basis, but there's no hurry to do that right now because there's still time until the options expire. So if we are closer to the options expiry, where it seems like we are unlikely to get assigned the shares, then perhaps I may go out and actually just add a couple more shares, especially if we're below the cost basis. So like I said, this is not going to be a huge position, possibly around 400 to 500 shares. Basically, that would be around what, 7,000. So it's around 7% of the portfolio. Reason for that is because the liquidity on the options chain is not there. So it makes it a little bit unattractive to hold for the long term, especially for such a small portfolio. For Robinhood, this one I'm very confident we are in a really good spot with Robinhood. We bought it at around $70. It's been basing at around $70. There is a pretty strong support around here, around 54, 53 bucks, right? Okay, I wouldn't say strong, but there is some sort of support over here around 53, 54 bucks. That is where we have got our cash account puts, and then we also have our covered call all the way at 90 bucks. So it's basically between the 0.786 and the 50% line. This whole range, if it stays between there, we basically keep all the premium. So we are in a fantastic spot when it comes to Robinhood. Let me take a look. How much premium did we get from Robinhood? Yeah, so we basically got around $300 from Robinhood just by promising to sell it at 95 and again promising to buy it at 55. So for me, if we actually see if we see an end to the conflict in the Middle East, markets recover, I expect this to actually bounce up relatively quickly, and to at least base around the like $90 range, right? It might not go back up to what the 120s, 150s that we saw last year, until we get a bit more bullishness coming back into the markets. I think apart from the conflict in the Middle East, people are also worried about long-lasting effects of inflation. People are also worried about the private credit issues. And these things are not things that happen overnight. They play out over time. So I think right now, if you ask me, where the price points are is because of the conflict in the Middle East. It can easily recover 10 to 20% after the conflict in the Middle East basically resolves itself. So that's Robinhood. For Iran, you can see over here, this may look. Do I plan to roll it up? Yes, I do plan to roll it up. I think for me, Robinhood is going to be one of the core positions in this portfolio. SoFi will be the biggest at around 25% of the portfolio. Thereafter, it's likely going to be Ethereum, Robinhood, as the other two, and Nvidia as well as the top 5 positions in the portfolio. So other positions like Grab and Iran and Zeta will be slightly smaller. I like Iran. because I think valuation wise, they make a lot more sense than Nebius. Like I think Nebius is a better business at the moment, or they seem to be getting more contracts with hyperscalers compared to Iran. But on a valuation basis, uh, Iran can catch up in terms of price movement compared to Nebius. Because once Nebius gets to a price where people feel it's too expensive, they will try and find the next best thing, and the next best thing is Iran. So this could end up being very similar to what we saw with Nvidia and AMD. Now, the difference between Nvidia and AMD is that last year, when I made the prediction that AMD will do better than Nvidia, or at least in the short to medium term basis, that was at the start of the year. You have to understand, Nebius is already like up what 40% year to date, if I'm not mistaken. Nebius year to date it's up 74%, right? Year to date. So it's 157 today. So I don't think Iran can catch up with the 74%, but I think it is a catch up trade in this sector. Iran year to date, we are up, we're down. Okay, we're basically flat year to date, down to 2.7%. So for me, I don't think Iran is a better quality company as compared to Nebius based on the contracts that we are seeing. Okay. But they are the better company based on valuations. And sometimes you also have to understand it's not just the best company, it's actually the best risk to reward. And for me, Iran really fits into that sweet spot. They're the number two, right? I think they are projecting around $3 billion in ARR this year. And it does help that they have very, very juicy premiums. So I may even be a little bit degen and buy a little bit more shares so that I can have more covered calls on this. Because when I sell covered calls, right, I don't really look at the P&L ratios. Actually, for any of my options, I don't really look at the P&L ratios for the options because it's just noise. Because worse, yes, you can lose how many 100%. It doesn't matter because at the end of the day, when the contract expires worthless, all it means is that you keep the premium and you just go and buy the shares, which you wanted to buy the shares in the first place. So it doesn't matter how much loss there is unless you want to roll it out. But like for me, for Iran, like I said, if it gets called away at 50, then I'll let it get called away at 50. I'll make over 30% in just a month. And then I'll just sell cash account puts at $50 to get it back. Okay, MDTA. So you ask about CoreWeave. I'll be very honest, haven't looked as closely into CoreWeave compared to the other two. I haven't looked as closely at CoreWeave compared to the other two. Give me a minute. I did some research in the past. Let me see if I can pull it up. Let me take a look. Do you have CoreWeave MDTA? I can't remember why I didn't buy or didn't look further into CoreWeave. I feel like it has to do with their debt, but I can't remember for sure. I remember it has something to do with their debt structure, but what is it? I can't remember exactly why, but yeah, because for me, for Nebius, whenever they go out and borrow more money, they already have some sort of agreement with the hyperscalers. They're using that contract to go out and agree. So no matter what, right, you know that that loan is being backed up by actually real demand. And I think because of that, they are getting pretty decent interest rates on their debt. If I'm not wrong, let me see if I can go and find what is CoreWeave's. You know what? Let's just ask Claude. Let me ask Claude. Where's my Claude? Okay, let me see. Can you compare Corey's debt situation to Nebius in Iran? I'm pretty sure the reason why I didn't look further into CoreWeave is because of the because I'm uncomfortable with the debt structure and with the private credit concerns floating around. That was probably one of the reasons why I didn't look further into them. Okay, I've just asked Claude. Let's see what comes up. Yeah, I think all of them have a lot of debt. I think my concern was how much they're paying or the average interest rates of their debt. Because Nebius and Iran issued convertible debt at like practically 0% interest. Whereas CoreWeave, I believe they have like a 8-9% interest payments on their debt. Let me just okay, wow, this is long. Yeah, so basically, okay, let me can I share? I hope I'm not like breaching any TOS or anything by sharing my cloud stuff, right? I hope not. It's not it's technically not copyrighted, right? So I basically ask it to compare the debt structure of CoreWeave, Nebius. Okay, so I start by asking why does Cloud think CoreWeave is not as good as Nebius and IREM? Because I remember saying that, but I can't remember where. And basically what you can see. Okay, so CoreWeave, I'm assuming this is correct. So please go and fact check this. I'm just using Claude. Total debt 21.4 billion, total assets 49.3, total liabilities 46 billion. This is the average. The debt is laid across multiple instruments. Again, this is for me something that I do not touch. If the debt it becomes too complicated, which is why again for a lot of people who are asking, I do not buy MSTR over BMNR. Simple reason: debt structure way too complicated in MSTR for me to actually feel safe about it. Like as much as we can research, as much as we think we know, ultimately we are still in a position where I don't know. I just feel like maybe there are certain clauses and all that inserted in all of these filings that we are unaware about or that we cannot catch because we just do not have the same amount of time or expertise to pick it out. Now, perhaps you can just nowadays with AI, you can actually just dump the entire PDF into Claude and ask it to filter out. But even then, it's not so easy. So for me, I do not appreciate it when the company's debt structure is extremely complicated. Oh, okay. See, they have senior unsecured notes 2 billion at 9.5% due 2030. Right. And a 3 billion convertible offering, variable interest rates averaging approximately 11%. So I can't remember. This sounds exactly like something I wouldn't touch. Right. If you're financing your debt at 9.2% at 11%, that is definitely going to be a problem, especially if we get a slowdown in the economy. Compared it to Nebius, Nebius is borrowing at 1.25 and 2.6%, significantly below whatever CoreWeave is doing. Yep, and Iran equity funded lightest debt, but again highest dilution risk. I think that's why when they had their at the money offering, investors were spooked. Right. So for me, I remember that's why I say I remember the debt of CoreWeave was something that that spooked me a little bit and something that I didn't like. Now I think for me, what I am watching primarily right now is this over here. Again, I am noticing that today we still cannot get past the 200-day moving average on United Health, which means I am expecting a retest of probably around 290s, right? Because this acted as resistance after our last drop. This is likely going to turn into support this time around. So when UNH eventually drops to this area, which is around 290, that's when I'll add another leap to the position and average down. And I'll hold that until 2028. I believe in the next 2 to 3 years, we should, we should see a little bit more certainty and a little bit more. We should see the healthcare sector basically recover. Again, for those of you who are in United Health, sorry, the key thing to look out for in this next earnings, I believe, is their medical loss ratio that needs to be around 88.7, 88.8%. All right, let's take a look at what BMNR has done. All right, let's take a look at what BMNR has done. Give me a minute. FDIG, that's the Fidelity Crypto Fund, is it? Or Digital Assets Fund, something like that. I think it is very similar to, I don't actually know their core positions. FDIG, let's see. Okay, their biggest position seems to be in Coinbase. Then they have Circle. I like Circle. Bitmine, Iran, Applied Digital, TerraWolf. I mean, I guess this is like the entire industry, right? So you are not sure who's going to win. You end up buying the entire industry. You're going to get very similar levels of risk. So you're going to be exposed to basically the same risk as if you were to like buy BMNR by itself and Iran by itself, perhaps a bit less. I'm not too sure whether this is going to be a bit less volatile because I think in this space, this is still fairly new. When I say this space, I mean like crypto in general is still fairly new. Yes, it's been around like for over 10 years, but still mainstream adoption has barely began, right? So that's what I mean by it is still new. And when some things are new, there's always a high chance where a lot of these smaller companies are no longer around in the next uh, 10 years or so. Now, I say smaller companies, I don't mean to put down any company. It's just that I wouldn't be surprised if Bitmine goes out and at the end of the day start to acquire some of these other companies under its umbrella, right? Or if Circle goes to do that. I don't know. Yeah, I can't say that I have done a lot of work into some of the other names over here. Applied Digital, TerraWolf, Cypher, Mara Holdings. I wasn't someone that really believed in the Bitcoin miners. Um, I wasn't really someone that believed in the Bitcoin miners, so I didn't look at them when they were in that space. And then now that they have pivoted some of them into Bitcoin holding companies and whatnot, I to be very honest, I've never really followed that because to me, I've always wanted to get my exposure to Bitcoin just by buying Bitcoin itself. So I know these companies like TerraWolf, Cypher Digital, but I haven't looked into them extensively to know why they're good or not so good. Coinbase, you're exposed to basically the same risk as if you were buying. I mean, right? The Clarity Act. If they are not able to offer you on their stable coins, Coinbase is going to be affected. Circle is going to be affected. Iran, okay, we have already established dilution is basically the key issue over here. They are trading at a pretty decent valuation. They are probably going to be second place compared to Nebius, but sometimes investing in the second place at a better valuation might be better than investing in the first place at a worse valuation. Bitmine, the reason why I buy Bitmine is the first company or in the crypto space that made me cave and actually buy Bitmine over Ethereum, primarily because of the kind of network effects that they can have through Ethereum. So I didn't see that kind of network effects with Bitcoin. Like Bitcoin to me is a digital store of value. Uh, yeah, and I didn't really see how people could use it apart from being a store of value. And yes, you can transact with Bitcoin and stuff like that, but still not at the extent that Ethereum can because of the smart contracts on Ethereum. And I think from a technological perspective, Ethereum makes more sense than Bitcoin. Bitcoin makes more sense if you are trying to protect your wealth, if you are trying to have sovereignty and all that. Bitcoin's right, but if you're talking about engaging in the current real world, then Ethereum is a much better fit. And so, because of that, when I invested into Bitmine, the assumption is that Bitmine will help or will be able to stake the Ethereum in a way that I cannot stake, right? Because I don't have 32 Ethereum right now. I don't really stake through all the staking pools and things like that. And at the same time, for Bitmine, I believe like what they are doing with Mr. Beast, with ops and things like that, I may or may not agree with every single investment, but they're going out and investing in companies that will build out the entire Ethereum ecosystem. So to me, that is a benefit of investing in Bitmine. That when you invest in MSTR or in some of these other companies, like I really, honestly, I can't remember. I just know Mara Holdings is a Bitcoin miner company, right? That's about it. Cypher and TerraWolf, they were always on my crypto list, but I never really looked into them because they are such small companies. But I know now one of the two, either TerraWolf or Cypher, one of them is also pivoted into becoming some AI data center thing. Again, I guess it's a trend, right? It's a trend for all of them. And I think at the end of the day, this is a space where it might be winner takes most, as Kathy would like to put it. They may get acquired by one of the bigger players later on once all this build out is done and things start to slow down, and then we start to see a consolidation of assets. So for me, right now, as of today, it seems like the hyperscalers are increasingly choosing Nebius, and I think that has to do with their software advantage as well. And like I said, second place is Iran. So that's basically what I think about this entire sector. Very nascent, a lot of small companies here, and I'm not too sure whether or not a lot of these small companies will be around, not because they're bad companies, but because naturally in a business cycle or in an economic cycle, the smaller companies tend to, yeah, companies in the same sector tend to consolidate after a while, right? So we are seeing that happen in streaming, and I think it won't be surprising for me to see this happen in the treasury companies in the crypto space as well. All right, let's take a look at what Bitmine reported in the past week. Okay, so Bitmine Emergence announced Ethereum holdings reaching 4.875 million tokens, total crypto and cash holdings of $11.8 billion. So Bitmine now owns more than 4% of the total ETH outstanding circulating supply of Ethereum which stands at around 120.7 million. They're 81% of their way to the alchemy of 5% in just 9 months. Now, let me just quickly pull up our valuation table so we will fill that in. Those of you who haven't watched the recent update that I did on Friday or Saturday, you can go and watch that. That basically breaks down some of the news that happened in the past week. Again, I've been testing out a new schedule. It seems like it is working pretty well, so I will always release my Bitmine weekly update on Fridays after the stream ends. Okay, what's happening to my internet? Give me a minute. Okay, if you take a look at the Bitmine, okay, I need to delete the copy because I was using this for the. Okay, just a very quick plug for myself over here. If you guys haven't watched it, basically, if you go to my channel, you can actually see the latest video on Bitmine, and basically what I cover over here is this is Bitmine's stock price when they own 5% of Ethereum. If you guys haven't watched it, you can go and take a look at this after the end of the stream. And basically, the entire premise over here is that over time, they're going to get to that 5% by, within the next, I would say, 6 months or so. And when that happens, if they stop buying and the price of Ethereum stays at this range between around 22 to 2500, what happens to the fair value of Bitmine at that point in time? Right. And I think we need to be able to understand what it means, because at the end of the day, Bitmine's entire premise is we want to hit 5% so that we can secure a large enough portion of the Ethereum network to ensure security for institutions when they transact on Ethereum. And so this is important for them. And then we want to see how that actually translates to their valuation, because you also have to understand that once they have 5% of outstanding ETH supply, the amount of staking revenue that they can generate increase, and it doesn't just increase because they got more Ethereum, it increases with the price of Ethereum increasing as well. Right, so let's jump back in. So this is the valuation table over here. Today they are right about 21.28. Okay, the exact price today is around 21.34, slightly below a 1 times MNAV. Again, last couple of weeks they have been trading below a 1 times MNAV on most days. There have been 1 or 2 days here and there, pockets of time during the week where they were trading at 1 times MNAV, but not significantly so. And you can see that because of that, they actually spent quite a bit of cash to buy their Ethereum in the last couple of weeks. So right now, Bitmine has staked around 3,334,637 Ethereum at average market price of around $2,200. So if I go down, you look into the details, they tell you that Bitmine's crypto holding comes in at 4.874 million. So let's put that into our screen over here. 4.874 million. How much? 858. So once you get that in, you drag this down, you see that they added around 71,524 Ethereum in the past week at an average price of 2,206, basically achieving a 4.04% of the outstanding circulating supply of Ethereum. Going back into the disclosure over here, you can see that in the past week, they purchased 71,524. We already calculated this. Maven, they are staking around 3.3 million. Okay, you can take a look over here. They are actually achieving a 2.9%, close to 2.9% BMNR yield, 7-day BMNR yield, whereas for CISA, this is around 2.73. So, like I said, some weeks the spread is going to be a little bit bigger. Some weeks the spread are going to be a lot smaller, but it doesn't really matter, because at the end of the day, institutions are with them for their safety, for their security, not just for the spread. Of course, the spread can then lead to them returning some of this as rewards to the institutional clients, but that is besides the point. So over here, let's see. How much cash do they have on hand? Oh, 719. Wow, that's quite a big amount of cash that is being used. $719 of cash on hand. They spent $145 million to purchase Ethereum. Now, if I take a look at the data on Yahoo Finance, BMNR average share price. All right, so again, by now, most of you should know how we do this. If you go take a look over here, the average share price, historical price on a weekly basis, you just change this to weekly. On the last week, on the 6th of April, on the lows of 1930 and the highs of 2196. So if we go back here, 2196 plus 1930, you end up with an average price last week of $20.63. Again, just a pure estimation. $23.00, and then if you drag this down, you realize that they only ended up using around $12 million of share issuance to buy Ethereum. Right, so you can see in the last couple of weeks, 3 million shares, $54 million worth of shares, and $12 million worth of shares. Practically nothing compared to what they were doing previously, where they were in the hundreds of millions or even billions of dollars over here. Now, I just want to show you over here. If I take 71,000 Ethereum, multiply by this, you end up with needing around $157 million. Out of this $157 million, $145 million came from their cash pile. So essentially, that's nothing. When you drag this down, once you drag this down over here, you realize that they only issued 600,000 shares. It's barely anything, barely moves the needle for them. So if we go back into the front page over here, again, we just add 0.61. You can see this shifts their MNAV up slightly to a 0.97. So we need to change this. This is 4,800,000. Sorry, short-term memory. 74585. Sorry, 74858. What am I about? And cash and equivalent, $719. So you can see current net asset value per share is around $21.99, right about $22, and we have been trading at around $21. So you can see that Bitmine's the base that Bitmine is forming has been basically at or around 1 times MNAV. On days slightly lower, like today, slightly lower, and on days right at 1 times MNAV. Right, so it's not really a big problem. Again, margin of safety 45%. And if we accumulate this 9.3 times 7, we're actually still assuming a slightly lower rate of accumulation, right? Because at 9,000 ETH per day for 7 days, you're only accumulating around 65,000 ETH. But right now, they're accumulating at around 71,000. But we're okay with this assumption for now, because in case things get a little bit worse, we wouldn't be surprised to see them slow down some more. Once Maven is online, do they need to wait in line? I think probably not, or at least the queue will be shorter, right? At least the queue will be shorter because it's only them. But I will have to double check on that. I would definitely have to double check on that. But I think it helps in the sense that they do not have to stick through third parties, so they can keep more of it for themselves. And I think overall, yeah, it's going to increase their profitability. I'm looking forward to see what they have to say to us on their earnings. And I think and I think I'm also excited for the Clarity Act to pass soon, so that we can actually get some idea around the direction for the crypto industry, what is allowed, what is not allowed. And I think it also helps SoFi. So you can see that this portfolio is asymmetrically positioned to benefit from the Clarity Act. Now, of course, if we do not get any decisions around the Clarity Act, which is looking unlikely to be the case, it seems like they are moving forward with at least presenting it in the Senate this week or next week. So we at least, I think Senate is back from their Easter holidays like this week, right? So I'm assuming that we're going to get more and more. We're going to get this basically passed through the Senate soon. Not super clear with the US governmental structure, but yeah, basically let's get this approved and let's all move on, right? Because other parts of the world already have their crypto bill. However skeletal it may be, they have some sort of framework to work with, right? But I think if US wants to be crypto capital, they have to basically get this done ASAP. They cannot wait until the midterms. So ETH stake, no difference over here. And basically, I mean, I'm not going to take you through the price target now, right? Because this is redundant. This just is something that updates by itself every single week, again, based on all of these assumptions over here. So right now, you can see that Bitmine is basically flat on the day. We are at around 21.30, again, possibly because of the price of Ethereum. And I think this is perfectly normal. You can actually see Ethereum. Let's see. I think Ethereum is coming down a little bit. Not really. Not really. This is actually just BMNR coming down. Ethereum actually has been holding pretty well, up around 0.9, close to 1%, but BMNR is actually basically flat on the day. So this is exactly the risk that we have with BMNR. And I think a lot of the other, personally, I'm not that worried about this for the very simple reason they have $700 million of cash on hand, which actually means that they can go out and keep buying Ethereum at least for at this pace for the next 5 to 6 weeks. If they slow the pace down, then this can extend to at least 8 to 10 weeks with the amount of cash that they have on hand. I think Tom Lee wouldn't want to slow down. I think he wouldn't want to slow down. He's possibly giving this a month to play out. And then I think, yeah, I'm just wondering whether what else he has up his sleeve or whether or not they will choose to pause their purchase of Ethereum because they find that they're already ahead of schedule and they're already very close to that 5%. I think that is a distinct possibility. Because if you think about all of the other Ethereum treasury companies out there, if you look at the other Ethereum treasury companies out there, they have stopped buying a long, long time ago, and none of them are even close to what Bitmine has. Bitmine, at least for them, the advantage that they have is that we have already given our shareholders a very clear idea. We want to hit 5%. We are already 9 months into this strategy, and we are already at 4%. So it makes sense for us to pause. I can see something like that completely happening if the crypto economy doesn't get better and we continue to trade below 1 times MNF. I'm selling weekly covered calls on BMNR and one income while keeping my shares. What sign should I watch for a signal? Sorry, what sign should I watch for a signal that a breakout and a strong move higher? Okay, so basically, what sign to look out for? I don't think it's any one thing. I think it's really a couple of things put together. The clarity act passing. This is something that can definitely help to. Sorry, the clarity act passing can definitely be one of the catalysts. Right now, I do not know how much of it is priced in. If you look at Poly Markets only gave it a 65% chance of passing, which means it is not fully priced in. And if any move is not fully priced in, I wouldn't be surprised to see like when the Clarity Act pass, all the crypto companies on that day get a sharp move higher. I think for me, how I actually look at it is whether or not it reclaims certain key levels. Again, when you ask me this kind of stuff, I always need to make a disclaimer. I am not a technical analysis guy. I am a fundamentals guy through and through. I picked up technical analysis maybe a year or so ago. So take what I say with an extremely, extremely large grain of salt. But basically, my technical analysis is extremely simple. I can teach my framework. My framework is very simple. It must be, I like to look at confluence points. So, for example, right, I would think that a pretty strong resistance would occur in the mid $30 ranges because likely we are going to come all the way up and test the 200-day moving average. Depending on how we perform, this 200-day moving average can either trend up towards the $40 range or basically stay flat around $35 range. And this is going to be the 0.382 FIB along with the 200-day moving average. This is going to be a very strong resistance point that we need to actually break through. But for the short term, all I'm looking for, which has just happened in the last 4 days, is and hold above this 50-day moving average. Now, we have only had 4 days over here. Price action hasn't been the strongest, and we are already at around a 62 on the RSI. At least on the, we're already on a 62 on the RSI. So I'm expecting a retest, which is exactly what we saw. And this is going to be at least retesting for a couple more days. And I'm presuming that this is going to play out the same way as Ethereum. So this kind of lags Ethereum a little bit, hopefully. And if that is the case, that is very good because we're going to see the 50-day moving average start to flatten. And then we can base around in this 21, 22 area for a while before we break out. So the first level that I would actually consider the reversal actually happening is if we break and hold above the $28 level. So you're probably going to get your first level of resistance, right, at around like $26, $27. But what I'm actually looking for from the FIBs is if we are at a 0.236, we break above this, come and retest this again, and that holds as support now, convert this to support. I think that is a sign that the reversal is starting. So you basically have 40% room for it to run upwards, and not 40%. Am I wrong? 40%. My math failing me. 30%. Is that 21? Is that 2120 now? You have around a 32% upside from here. It can basically, I'm saying that Bitmine can move up 32% and still not have a full confirmed breakout. I think, like I said, we need to have more than a 32%. It'll go past this 0.236, come back down again. Yeah, so if you're talking about a breakout, like what MDTA says, it is not fully priced in because we can see on poly markets only around 66% chance of it happening, right? So, and it's 66% chance of it happening in 2026, which means there are around 30% of people who are not even sure whether or not the Clarity Act will get passed in 2026. But recently, we have had Brian Armstrong coming out saying that things are resolved. He is, suddenly happy. People are moving along. I think he was also a little bit pressured to get the Clarity Act passed. Imagine how that would sound. Clarity Act passed because Coinbase rejected it. I think that doesn't sound too good, right? Because right now, yeah, at least that's how people are trying to frame it. So I think because of that, and I think he probably got some negotiations done with the banks as well, that they must have reached some sort of compromise. And as I was saying a couple of weeks ago, the best negotiation or the best outcome in negotiations is one where probably two parties are both equally unhappy. And I think that seems to be where we are right now with the negotiations around the Clarity Act. So if we get this passed, that would be absolutely fantastic. I think we get a move higher. But for Raw Fitness, just be sure the pump during the Clarity Act. I'm not saying it's definitely going to be a short-term pump, but do not get too worried about that pump. I think what I'm actually looking for is more of a structural price action forming. And so the key levels, like I said, really for me, I'm just looking at $28. I know some other people are looking at like 24, 26, and all the micro levels in between. I make my life very simple. I'm just looking at 28. So it can move up 30% from here. If it moves up 30% from here, firstly, I'm already very happy, right? Because my position would be up by 30, 40K. So I'm not complaining if it moves up to this point, but also know that once it moves up over here, if it cannot goes past this point, then this is where likely it's going to reject and come back down and retest the 50-day. So by then the 50-day will be inflecting upwards. So I like to look at confluence points. I like to look at momentum, and basically I use my 50-day moving average to just line it up with the fibs. So that's all I do. Right, and so with that, sorry, let me just. So again, if you can't see what I was talking about earlier, this is what I mean. The 200-day moving average, depending on how the price moves across the next couple of weeks, we may see this curve actually flatten out a little bit. And if so, we would see a pretty strong resistance around here at the 200-day moving average, especially if it becomes some sort of confluence with the 0.32, the 382. Yes, I'm supposed to be showing this. I really need to get better at switching stuff when I'm talking. But anyway, right? So this is where I think you will get the strongest resistance. And once we break out past that, I think, yeah, we should be good to go. Let me see if I can pull up the volume profile on Bitmine. Okay, I don't think Mumu has the volume profile. I have to pull it up on Webull for you. Give me a second. So if you take a look at the chart on Webull over here, you can see we have a pretty strong volume shelf over here around the $21, $20 range. That's basically where we sit. And then in this range, 24, 25, 26, we practically have nothing all the way up to 28, $29. So I think we will see the first so-called, once we break out past this $21, $22 range, really we need to see a retest of the 28s. It should hang around here for a while, and then moving on beyond that, we should see 35s. But even then, the volume is pretty thin all the way through. So there's basically, at least to me, if you ask me, the key points to look out for near term, 21, it must hold and hold above the 50-day moving average. And then after that, a retest of 28. Yes, and I think that's all for Bitmine. I think markets are coming down slightly. I saw that the portfolio is no longer in the 100K range, if I'm not mistaken. Let me share. Let me go back to the portfolio. Right now, portfolio is at 99,000. It's all right. It's basically right on point. And I think right now I just want to take a look at how much, basically just show you how much premiums that we have collected so far. Okay, so this is the last thing I will do before I call it a day. The goal of the portfolio is simply to beat the S&P 500. I actually hope to get this to at least 500K before I do anything with the portfolio. But the aim is to get it to 500K. I give myself a 5-year time frame to beat the S&P, because it's not easy to get to 500K in 5 years if the market turns bad. So we just want to beat the S&P 500. Of course, if the market does well, like the last couple of years, then I think from 100 to 500K is not too far-fetched, because the last time round I ran this portfolio, I believe the returns were like 185% in 2 years plus, or 3 years. So I believe, even if we get to 300K or so in the next 5 years, that will be 3xing the portfolio. So that is the goal of the portfolio. And at the same time, I also want to show people how you can use this to generate income pretty consistently. The aim for me has always been around 1 to 2%. So last month, I actually recorded this. You can actually follow this on. Okay, so do you plan to add new cash, or just what is generated? Okay, I realized that there might be some of you who are like completely new to this entire challenge. So basically, the point of the portfolio is this. I actually started out back in January of 2026. Let me just share this with you, because I actually put it down on my X. Okay, so so on my X profile, I basically wrote down the entire thesis over here, or the entire way that we're going to structure this challenge. The account started with around $100,000, right? And from here, basically what we're going to do is that this is a multi-year challenge to try and beat the SPY on a 5-year timeline. So far, thankfully, month 1 or the 6 weeks in, we are doing fairly well. We are basically flat while the S&P has been down. The rules are simple. We are only allowed to add fresh funds on the first trading day of each year. Okay, we are not able to add funds throughout the year to buy the dip. If our cash secured puts, if we end up finding ourselves in a position where I run out of money to buy the stock, I can't just take money from my other portfolio, throw it in, and buy the stock. I will have to roll the cash secured puts out until the day that it can actually expire worthless. There will be no withdrawals until the end of the challenge. The reason why I started this entire portfolio in the first place is because I kept having to withdraw money from my main portfolio for day-to-day expenses and for one-time purchases. So like when I did my renovations and stuff like that, I withdraw from that portfolio. When my parents did their renovations, they are also going to withdraw from that portfolio. So it's a bit hard to track the profitability over there, because there's always constant like deposits, deposits and withdrawal. So I wanted to have a sum of money that is completely isolated so that people can actually track the returns. And that's how we're actually going to run the portfolio. So because of that, we are going to use a time-weighted returns instead. And basically, I don't think, yeah. So if I can actually show you, let me see whether this works. Okay, this is about can I see this? Yep. Do I trade covered calls, cash account puts? Yes, I do that. Basically you can see I like to do what I do on like Zeta and Robinhood on the entire portfolio. That's the ideal scenario. That is just that some of the premiums or some of the companies really are not at prices that I would like to do that at. Um, this week I'm considering doing it on SoFi, but apart from that, some of the positions in this portfolio like Zeta and Grab, I have to be a little bit more strategic in when I choose to sell my covered calls because the options chain are pretty thin. But by and large, I would like to do that. That's why I like Iran, I like Robinhood. SoFi is fantastic for this. In my main portfolio, BMNR is fantastic for this. So I aim to get around a one. Yes, SoFi's premiums are not great. It's just that because they are my biggest position, like I have 15,000 shares in the main portfolio, it's sizable enough to when I don't have to take too huge a risk and to get a pretty decent return. So my aim every time is actually pretty simple. I only aim for around a 1.5%, between 1 and 2% yield every single month. So that works for me because the main portfolio, uh, initially before the drawdown, it was around 500 over 1,000. So 1 to 2% means you're getting between $5,000 to $10,000 a month. So that works. And similarly in this portfolio, I think let me show you the Excel over here because I basically report this on my Instagram every week. So you can actually track this and follow along as well. So you can actually take a look at on screen over here. You can see that right now, based on the current open positions, this is for the month. We have realized around $985 in premiums this month. We have unrealized premiums of $1,478. Now, not the entirety of this 1,478 is going to be realized this month. I believe around half of that will be realized in May. Half of this will be realized this month. You can see last month in April, we already realized a total of around $1,780. So on a $100,000 portfolio, that's around a 1.8% return, right, for the month. And if you extrapolate that out over 12 months, you can actually live off this pretty comfortably, or at least if you have a large enough portfolio. Otherwise, it can be a supplement to your income. I mean, it will be pretty nice to have an extra $1,700 per month. So for me, because I live in Singapore, the exchange rate is like a 1.3 times. So I just multiply this by 1.3. So it's an extra 2003 for me in Singapore. And I think no matter where you are in the world, nobody was going to say no to, an extra $2,000 a month. And basically that's what I'm hoping to show you guys, that this is actually possible. I did not go to, any sort of finance school. I picked everything up pre-AI days when I had to Google search everything and control F the entire 10Q, watch through set through bunch and bunch of like, fake uh options courses and whatnot, but you eventually figure it out on your own. So hopefully this is something that will help you guys over time to feel a little bit more confident in doing it yourself. So if you guys ask me again, I've never said that I'm some sort of expert or guru. I am learning. I just started this learning probably 7, 8 years, 9 years ago, when 2017, 10 years ago at this point. So I can answer some of your questions, but again, not a guru, not an expert, not nothing. I'm just another dude on the internet. So Yeah. Okay. I just want to address something that Raw Fitness says. He runs a weekly wheel strategy on BMNR using cash puts, covered calls. It's been working well. Uh, Thank you for that. For my technical analysis. Again, I want to say, please. I think there are a lot of. I'm not saying. I'm not trying to like put myself down over here. Please do not think that. But I'm trying to tell you honestly, my technical analysis is extremely basic. It just works for me because I don't need to go because of my timeline. I don't need to like really pinpoint the exact price to go in at. So that's why you can see for BMNR, I basically dollar cost average all the way down from 40 to 20 because I don't have a set point that I need to get it to like basically optimize all my cash. I had enough liquidity to dollar cost average it all the way down. So that if you do not have that benefit of liquidity or you are trying to do more short-term trading, then my technical analysis might be a little bit too basic. But if you're looking for entry points, right, for long-term portfolio, then yes, what I'm doing works actually. For at least I find that it works for myself. If you have 15K share, if you have 1.1K shares, you don't want your shares to get called away. Very simple. You just go to the options chain. You look for a lower delta, like a 0.15 delta, 0.2, 0.15 delta. You might get lower premiums, but it's better than nothing. So that's number one. Number two, once you are comfortable with that, you will tend to want to try and be a little bit more daring with your strikes. Those will yield you better premiums because eventually you will realize that you can just roll the calls out. So I'll be very honest that the selling, okay, wait, two things I want to say. The selling of covered calls and cash account puts, they work, definitely work. The risk that nobody talks about is that what happens if you are relying on that for income, but then there are months that you actually have to roll the call out, roll the cash secured put out. And because when you roll, you do not get to realize your premiums until the following month. Good morning, Bob. So because of that, I would think that the most dangerous or the most volatile and risky period of any wheel strategy is the first 12 months. So when you run the wheel strategy, you have to be extremely, extremely disciplined. Like I have built up a safety net where if I have to roll for the next 6 months and not take any income from my portfolio, I am perfectly fine. I can pay off all my expenses. I can perhaps choose to withdraw slightly lesser from the account, and nothing about my life would change. But the initial 12 months, you have to be extremely disciplined in order to build up your safety net first, because you cannot just do it every week and expect to just take money and never ever get a sign or never have to roll. You will eventually have to roll. When that happens, you're not going to be able to take out the money. If you're like me, you actually use your premiums to actually fund part of your life, then you have to be a little bit more careful of that. But if you are just reinvesting your premiums, then of course, no big deal, right? You just have to make sure you have enough cash in the account. I need to roll my BMNR $21 covered call this week. Thank you for selling $21 covered calls. That's why BMNR went all the way up to 21. Okay, just one last thing about what Raw Fitness says. Raw Fitness runs a weekly wheel strategy. Now, that works. I used to run weekly strategies because I was optimizing for returns. So Raw Fitness, you can correct me if I'm wrong. I think you are optimizing for returns. That is why you run a weekly wheel strategy. I don't know what delta you are doing this at, but when you do a weekly wheel strategy, you also got to understand gamma, because the gamma squeeze can actually be pretty brutal uh, towards the expiry date of the call option, or covered call or the cash account puts, either one, right? Um, and so that can cause the price fluctuation of the options to be very drastic. So the delta shows you how much the options will move every time the stock moves up and down by $1. So if you get a delta of 0.7, correct, means that when the stock moves $1, your delta, you can expect the options price to move by around 70 cents. people use that for a gauge on how likely they are to get a sign, but the delta actually moves as well in line with gamma. So this is something you just have to be aware about when you are selling pretty close dated options, because your delta can move pretty quickly and things can go against you. So if you want to, so it really depends on what is your aim. If you're trying to optimize for returns, then of course shorter dated options work. But if you are like me, I do not want to optimize for returns. I used to try and run at 2-3% every month, but then I ended up getting a sign some months. And when I got a sign, I have no cash flow for myself. It's not just because I want to live on the premiums. It's sometimes because I just want cash in the account to buy the dip. And it sucks holding the shares, not having enough money to go and buy the dip because they're all tied up in cash secured puts. So for me, what I have found that works is that I go further out in time. And then I sell my cash secured puts and covered calls there. So usually what I like to do is that I'll go out 30 to 45 days. So for example, SoFi, you can go up to 29th of May. This is going to be past their earnings. And you can actually see if you go to 29th of May, that's 46 days out. Let's say if you are like Kunal and you do not want your shares to get called away, you can take a look over here. You can sell $21 cash secured puts. Now, I do not know what your average is. Okay, but in this portfolio, our average for SoFi is around $17.70. So let's see. So, okay, take a look at this. I can sell I will get $23 today. Okay, the spread is not very wide. The spread is not fantastic right now. I can get $23 today. If I sell 15 cash secured puts, I get $345 today. If I put up my 1,500 SoFi shares for sale at $21 on the 29th of May. Okay, this has a 0.14 delta. So this is what I mean by doing things that are further out in timeline, and also you can go down the delta chain, right? You can go all the way down to 0.14. And at this point, when you sell this covered call, you will end up receiving 300, or I will receive $345. Okay. And once I receive $345, basically, if it doesn't hit $21, then I'll keep the 345. If it does, you get an 18% profit in just 6 weeks, which is pretty decent. And then you can just sell cash secured puts from there. Yes, Kunal, you're exactly right. Right. So everyone's situation is different. If you actually have a smaller amount of shares, relative to, if you actually have a smaller amount of shares and you feel like the premiums you are bringing in are not exactly worth it because you're only getting around $100 a month, I always tell, because I do manage some clients' portfolio, and for most of them, if they have less than 100K in the portfolio, and the reason why I started this portfolio with 100K is because some of my clients, I know they are watching, and I always tell them 100K is for a very simple reason. You investing is hard work. It is not easy, right? And you put in so much effort into the markets. And if your portfolio is 20, 30K, even if you 10x that portfolio, that 20K is going to become 200K. And it is a lot of money, but it is not life-changing. It's not going to allow you to stop work. Yes, maybe it's a 1 or 2 years salary, depending on your job, but it's not going to be like life-changing money. So that's why, to me, 100K or so makes sense for you to then invest more time into the markets, because at that point, you have a little bit more leverage. So for example, in this case, like I just showed, in March, we realized around $1,700 USD in profits. In Singaporean terms, that's around $2,300. This month, I am on track to realize around $1,400 in premium. Again, you convert that to Singapore dollars, that's around 1,700. So again, you cannot live off 1,700 a month, at least in Singapore, right? Singapore is an expensive place, but it helps to ease some of that burdens for people who want to use this as another income source. So everyone is different, definitely. But if your portfolio size is smaller, then focus on like growing that portfolio. Focus on like trying to find ways to cut your spending so that you can invest into the portfolio. Is it dangerous to write puts and calls before earnings? Okay, so what do you mean by dangerous? You see, because usually when you write puts and calls around the earnings, you get the highest IV. So if you take a look, 1st May, you can see the IV over here is extremely high compared to the other weeks, because if I'm not mistaken, SoFi is reporting their earnings on 27th of April, which is this week. So they have a highest IV over here. This IV you can actually use to calculate the expected move, which means the market actually tells you. I'm not too sure how many of you know about what is the expected move. If you guys watch TJ, he talks about it quite a bit. So if you go into this table that I have over here, the expected move basically uses the IV to tell you what level the stock price will be at. So let's take a look at the numbers on screen. I will just do this before we call it a night. Then you can have a better idea of where to go from here. Okay, so if you actually see this, if you look on screen over here, on the 1st of May, right now we are having an IV of around 79%. So you can see that over here, they actually tell you the expected move is plus minus $1.90. Right. So I actually have an Excel file earlier on where I actually input the implied volatility myself and check it. But over here, if you're using certain brokerages like Moomoo, they show you the exact same thing over here. So they basically tell you how much they expect the price to move based on the implied volatility. And you can actually use that as a guideline for where you sell your cash secured put and where you sell your covered call. So if you do not want to get a sign, then you can sell it slightly above or below the expected move. If you want to get a sign, then sure, just sell it right at the expected move. And you should do pretty well from that. Because what you're going to end up with when you use the implied volatility on screen to actually find the expected move, you end up getting an upper and lower bound. So like over here, when I was assessing the 15th of May covered calls for SoFi last week, you can see the expected move was around 420 based on the what we were assuming earlier on, which puts the upper price limit at $20.80, lower price limit at $12.40. So if you want to sell a covered call on the 15th of May, I mean, this was based on a couple of weeks ago when I did this calculation, so this is no longer accurate. Then the upper limit at that point in time, I think this was like done 2-3 weeks ago, was around $21. And at that point, you will have a lower chance of it. Getting assigned, because this has to do with like the standard deviation, the bell curve. But yes, so for me, I am that's how I usually choose where to sell my options. I use the expected move as a guide for me to decide where I want to sell my options. Give me a second. Let's bring this back up. The frustration with that is that when you have held these shares to 30, only oh yes, of course. So okay, so you see, the thing is, I used to be in that camp, and I think everybody, if you start wielding options, you have to go through this. And TJ is also extremely transparent about this. For someone who might be new to this, I know he doesn't recommend it. And initially, I didn't understand why. But as I've done it over the last 3-4 years, I've also started to I also understand why you would not want to be selling covered calls and cash secured puts. when you are still newer to this, because whether or not they are close to being called away has to do with the intrinsic and extrinsic value. And if you don't know how to keep track of this and calculate this, and not every single platform shows you that, then you might be in danger of your shares being called away early. But for me, because I track it extremely closely, I will choose to roll it out at certain points before they actually get called away. And you got to think about it this way. If you bought the shares at 30 and they drop to 15, you sell covered calls at $21. If your $21 covered calls are in danger, that's actually a good thing, because it means your stock is actually recovering, right? So it shouldn't be stressful. It should actually be a good thing that your stock is recovering, because let's say you don't have the covered calls, right? And it goes from 15 to 21, you'll be happy. The only reason why you're unhappy is that because there's the covered calls over there. Then fine, pay back the money and then go and find someone else to go and promise to sell your shares at $25, $26, and then wait. And if it hits 25, 26, means you are getting back to closer to the $30, which is your break even. If it doesn't get to 25, 26, doesn't matter. You get to keep the premium for yourself. Especially if you know SoFi will pump in the next few months. The thing is, I do not know. For the very simple reason, the macro might not allow it to. I can't see a scenario where the conflict is still ongoing and SoFi is recovering. Because if inflation goes up, interest rates go up, realistically, we already know, because Anthony Noto told us, even if interest rates go up, we have the tools to pivot. We will just find other ways to monetize the business. Whatever we have guided for will still be achievable. That's what he told us, but that's not what the market will price in. The market, to a certain extent, will tend to overcorrect, which means interest rate up, all finance companies will take a hit. And SoFi will dump along with the rest of the market. So that's why I don't know, which is why I'm perfectly fine selling it. And if it reaches those levels, I will just roll it out. That's also a good way to leave 30% of your shares uncovered each week for the upside, while maintaining 1-to-1 ratio between shares and cash. I'm ready to buy dips. That is a pretty efficient way to manage the portfolio. Like with my main portfolio, because I am not living off that portfolio much anymore, or at least I can. Okay, I have chosen to like lower how much cash I take out of that portfolio, at least for this couple of months. So I've been very aggressive. I'm like nearly 90% allocated in that portfolio and only around 10% cash. In fact, less than 10%. I think it's like 7-8% cash. Right. But that's because I'm trying to capture capital gains from this point. Right. Which means I need BMNR to get to $35, $40. I need SoFi to get to $35, $40 as well, within the next 2 years. So that's what I'm hoping for. And for that, I'm willing to take a slightly lower return, because when you sell covered calls, usually the returns are not as good as cash account puts. Hi, Lawrence. Let me see. Wow. Okay. So for I think for Butterfly, because they are such a small company, their moves have been extremely violent. It went from like $1.20 all the way up to 5, came all the way back down to 250, a 50% drop, and then now it's recovered back to around $4.01. And all the while, it is still a $1 billion market cap, which means a couple of days ago, it was just a sub $1 billion company. So I think because of that, because of the volatility that you have in the stock price, that's why you are getting such a premium. Because if you take a look on my screen, it's at 107%. The IV is at 107%. Historical IV is only 58%. But yet, even at 107%, it is still pretty low on the IV rank, 26 and 52% percentile, which is basically right at the midpoint. Which means that this is a very volatile company. and options are being priced based on volatility as well, not just pricing of the stock alone. This might be this is really seems like a good company to have cash account puts on. So you're getting 48 cents. Wow, okay. To buy it at 4. Okay, let's not go so degen. If you go out to this, you're getting 12 cents to buy it at 3. Even then, that's pretty decent. That's a 4% yield. That's pretty decent. Use bar chart for example. Yes, I'm going to wait until we know more about the Wall Street field. The market wants to move up, waiting for clarity. Yes, I am good. Anyway, I'm really putting together. Okay, you guys can have a sneak peek at this. This is basically 7. Okay, no, I started 2017, but I always tell people I've been investing for like 9 to 10 years, but like honestly, investing, I would say seriously since 2019. So that's like what, 8? Is that 6, 7? My math fails. See, I can't do 2026 minus 2019, but I can calculate expected move. That's called math. Okay, so this I am not shitting you guys when I said this is real. Okay, this is, if you can take a look at the page over here, it's a 1 out of 176. I spent the entire weekend putting all of this together with Claude. Again, not sponsored, but Whisperflow, game changer. I didn't have to type any of this out. I just spoke. And this is just a skeleton, by the way, which tells you how much of a yapper I am. But I basically condensed everything I've learned in 8 years into like this 176 pages. By the time I expand it, it's probably going to be like 250 pages. Don't worry, I'm not going to make you read the 250 pages. I'm going to turn the entirety of this 250 page into a very long, free for everybody kind of investment course, so that you know what, you guys, basically the whole point is to screw all the gurus out there is charging people to learn investing and to give everything away for free. And so basically what it takes you through, there's a couple of points over here. The first part is about why you invest. I talk about inflation. I use Singapore context because some of the people that are going to be, or some of the people helping me to test this are my friends, and we are all from Singapore. So I use Singapore context. But again, the concepts are applied globally, so it doesn't matter. Then I will take you through the framework that I use to look at companies, and then I will take you through so I'll take you through frameworks. I look at companies. There are a couple of steps. And then I also take you through the framework that I use to look at. Okay, so I have 12 steps that I use. Okay. After you do the 12 steps, then after that, you have to follow earnings. Oh, I didn't realize how long this is. 100 over pages. I can really talk. I just realized that. Oh, it's 12:30. I need to go to the gym soon. Oh my goodness, where's the next section? We're still at understanding the value chain. Okay, but basically, I go through my 12-step framework. I go through earnings reviews. I go through technical analysis. I go through options, everything in this. This is going to be like 8 to 10 hours. So give me some time to put it all together. Okay, but basically, I'm teaching you everything I know, and everything's going to be for free. You don't have to pay a single cent. You don't have to subscribe to anything. You don't have to pay anything. Everything is all going to be given away for free, because I do not believe the knowledge of investing should be gatekept. And I don't believe you even need to pay a single cent for this. The schools are failing us by not teaching this, and all the fake gurus that are just compiling Google reports are charging thousands of dollars for this. It's ridiculous. I am perfectly fine, and just so you know, I do pay for people's Patreon, like Chris Patel. Chris Patel has his own Patreon. I pay for that, right? Because I think he gives very good insights and research and things like that. And I think it's perfectly fine to like pay for research platforms, basically people use their time to do the research for you, and I think it's perfectly fine to pay for that. But to gatekeep the knowledge behind $4,000, $5,000 paywalls, I think that's ridiculous. You don't have to read the entire thing in one go. It's gonna the skeleton is 170 pages. It's gonna probably be like 250 odd pages. I'm gonna turn it all into an entire video series. It's probably gonna be around 8 hours long or so. So we will see how that goes. But yes, I will post the transcript if you guys want to read it as well. Yeah, because I feel very, very strongly against people charging thousands and thousands of dollars for investing courses. I think that's ridiculous. Yeah. So I do subscribe to some patrons in the past. The only one I still have left, I believe, is Chris Patel, Amit's friend. I like his macro analysis, so that's why I keep it on. And I believe it's fair, right? He takes time to simply to summarize things that happen in the macro for you for me, so I don't have to do the summary myself. And because of that, I think I'm paying him for his time. That's perfectly fine. But paying for investing knowledge, where everything now is Googleable and cloudable, I think it's ridiculous. Am I going to Amit's meeting in Singapore? Oh, that reminds me. Yes, I do need to book a ticket for that. I've cleared my schedule. I am definitely going. I'm definitely going. You reminded me. I will need to go and book my ticket before it's too late. But yes, I've just confirmed that I will be free during that time. So I mean, I'll be very honest. This is not going to be a very quick thing. Even when I was doing it with Claude still tell me, "Are you sure this is 8 hours? I think it's going to be like a 10-hour course." Okay, so whatever, 10 hours. But again, everything is going to be given away for free. I am testing it out with a couple of friends to make sure that it's easy to understand. I've got invited to 2 different groups to teach this in. Yeah. So I will trial it out on them. If they give me good feedback, they can understand me, then I will release everything probably second half of the year. So it's still going to take a while, but in the meantime, you have me on every single day. You can still ask me. All right. And yes, nothing over here nothing about this 8-hour, 10-hour thing is going to be paid. Everything is going to be free. So you guys you guys can basically go through the same thought process that I have gone through over the last 7-8 years. Okay. All good. Sorry, that was a rant. Yeah, it annoys me sometimes when I see people charging thousands of dollars for stuff like this. So give me some time. Let me test it out. Yeah, and then it will be released for free, all 10 hours of it. I haven't decided whether or not I'm going to host it on my own website or on YouTube or on YouTube through my own website. But either way, I will think about something. All right, with that, do you ever travel to America? Okay, to be very fair, I nearly traveled this year, because I wanted to watch the World Cup. Yeah, but life got in the way, renovation stuff happening around that time, and yeah, couldn't. But see, I went to America last year, and I applied for the ESTA when I traveled from Canada to Alaska. So my ESTA lasts for 2 years, which is until 2027. So there is a chance that I'm going next year because I want to travel to America before it runs out. The UK. Oh, I will definitely be back in the UK. I mean, I used to study in Newcastle University, so I go to the UK quite often. Ever since then, sorry, I don't mean that I go often, but I mean I've been traveling to the UK at least 4 times, 3-4 times since then, three times. Going to be 4 soon because we are planning a pretty long road trip next year. I will stream a little bit later. Sure, you guys can come in anytime. You know what? I'll be very honest. I start a little bit early because I know that most people are on a mid stream, so I can get the mistakes out of my system first. Yeah, I can get used to talking to a small group of people, and then the bulk of you can come in later after I've ironed out all my mistakes. That's perfectly fine. Oh, Florida. Florida is nice. Where would I go to in America? I have relatives living in LA. Yeah, I have relatives living in LA. So probably there first and then around. I have New York, somewhere I would like to go. And yes, Florida as well. Event. I don't think I'm at the level where I can do events yet, but eventually, hopefully in time. I mean, we have just really started this. I've been posting videos for the past year, but I'm doing this live thing only, you know, yeah, starting this year proper. So excited to see where this goes. Thankful for all the support. It's like people buying books on how to save money. First, yeah, yes. No events, meet up, perfectly fine. Huh? Yep, I agree with this. The first page should say, "Do not buy this book." Right? I agree. Yeah, I mean, really, it's been a pet peeve. I do not know. I do not know whether or not I have told this story on stream before, but like back in 2019, I nearly paid $4,000 around there for this course in Singapore. Because at the point in time, you got to understand, right? Like 2018, 2019, I was investing in like Singapore stocks, and then after that, you hear your friends investing in like all the American stocks, and they're doing well. So you want to learn, and they have this I don't know whether it happens like this in the US as well. And this was like pre-COVID days. So I actually ended up having to spend I nearly spent $4,000. I believe it's $4,000 on this investing course. And the funniest thing is in the investing course, they want you to bring your own money into the so-called boot camp to invest with your own money during their games, because they say that, oh, when you lose money, you actually learn. This is their. Thankfully, I didn't sign up for that because that was in, I think, 2019. Yes, 2019. So thankfully, I didn't sign up for that. It was like you're all in like this conference room, because they, now it's like everybody is like trying to get you onto some sort of webinar. So last time pre-COVID, no webinar. Everybody literally went down to some conference room in this like sketchy ass building. And being like pretty new to all of this at that point in time, I started like in Singapore stocks 2017 or so. Pretty new to all of this. I went in, in this room, and then they're like, okay, this entire program is like $8,000. For the first 10 people, it's going to be $4,000 and all that kind of nonsense. And people are like running up to grab the spots for $4,000. Oh my goodness. I'm so thankful I didn't. Firstly, because after that, I started to find out more about their company. Shall not name them, but I found out more about their company. And I realized the stuff they teach, literally, right, it's just copy paste from Google. So they're charging you to read Google on your behalf, which is ridiculous. And then after that, I found that the companies that they told people were safe basically ended up doing nothing. Yeah. So I think there are a lot of these kind of I think there are a lot of these kind of things out there. The people get tricked. I know friends who have paid thousands, tens of thousands of dollars to learn and still end up with nothing. So yeah, pet peeve. It's really something I can go on for on and on and on. This, I mean, thankfully I really do not know any influencers or anything that do that. I mean, the bunch that I follow are really respectable folks. Right. I mean, the only patron I still have left, if I'm not mistaken, is like Chris Patel. And I pay for it willingly because I love his analysis, and he's spending time outside of his work to do the analysis and summarize it. And I think he summarizes it in a way I think people, I think I've meant like some people tell me that they find his stuff a little bit dry, and I think in some ways it is, but I feel like there's a lot of in-depth insights into what he researches that people tend to miss when they look when they just look at the surface. And one of the things that I learned from him is basically I tried to understand how he decided to invest in the cruise lines. Like everybody knows his cruise lines were huge winners, and understanding that profile. And so at that point in time, I was all about growth and like, let's scale this business and all that. And it was understanding how he spotted the opportunities in cruise lines that got me interested in understanding that structure of companies, which then relates back to the earlier example of that's how I know when I look at CoreWeave, 11% and 9.25% on the convertible notes, I get a little bit scared myself. Palm Beach is the new Wall Street. Why? Because everybody retires there. Sounds like paying mahjong and tuition fee. Yes. Bluffton, South Carolina. I mean, I think America is going to have to be a multi-year trip. I felt like I spent most of my 20s like exploring Europe, and when I was younger, I was in Australia growing up for a couple of years there. So I finally made it across to Canada and America last year. Yeah, loved it. So definitely have to come back again. And when I was like planning routes, I have this like entire Google Docs, or not Google Docs. I have this file in my Google Drive, which is all my travel itineraries, and it's basically by road trips. And I think that there's at least 4 or 5 in the US. I have a job where I can listen to podcasts all day. Yours is I'm thank you. My job, I can listen to podcasts all day as well. So we're in the same boat. Yes, you know what? I really, really believe this. If the people know how to invest so well, they really shouldn't have to sell a course. Yeah. Yeah, because honestly, I find that most of the respectable investors that I follow or that I subscribe and pay stuff for, I'm not sure if you know, there's this guy that Amit brings on pretty often, European dude. I can't remember his name now. I used to subscribe to his Substack for a while. And I think things like that, those are the kind of things that are worth subscribing for. But it's not worth to subscribe for someone to tell you how to assess a company and things like that. Yeah. If you basically listen to like Alex Hormozy, what you are subscribing for when it comes to like Chris or is his name Amir or something like that? No, not Joe, not Jose. I think Amir. It, yeah. Let me see if I can find him on YouTube. I love his analysis, by the way. I believe his name is Amir. This guy. No. Jose is the guy with the semiconductor guy, but he does like Palantir Weekly with him. Pretty small community. He does pretty good equity research. Yeah, so I used to subscribe to his Substack for a couple of months just because I was at a point where I was just learning off everybody. And I think these are people that, I find that, yeah, they're running the business in a very ethical manner. I don't mind paying for people's time when they summarize things for me. But when you're repeating things that I can Google, or like in this day, in this day and age, ask Claude, then there's basically, yeah, basically, you know, paying for things that is already there. Uh, Amir's analysis is super deep. Uh, he screwed up his penalty trade. Okay, I don't follow him as closely nowadays, but I used to like it because I find his reports a lot more, uh, nuanced than some of the bank analyst reports, because I believe he consolidates some of his own data. I'm not at that level where I consolidate my own data. For Grab and Robinhood. Okay. For Grab, couple of streams ago, we were talking about how when I just came back from Vietnam, one of the things I realized is that a taxi ride in Singapore in the off-peak hours costs 5 times as much during the peak hours in Vietnam. So by right, during peak hours, you should be costing more, right? But in Singapore, our off-peak costs 5 times more than Vietnam. And during our peak hours, it costs 8 to 9 times more than what Vietnam costs. And so I think this for me affirms Grab's thesis of, going down the route of emphasizing affordability. And I think people who do not live in the region really do not understand the disparity in earnings between the region. And I can tell you, if you have Southeast Asian friends here, they can tell you that the disparity between even just like Singapore and Malaysia can be pretty big itself. And Malaysia is number two in terms of GDP per capita in Southeast Asia, and the disparity is still rather large, which is unfortunate. But I think at the same time, the region itself has pretty good relationships with each other, and it is a growing region, and it takes time. So for Grab, it is a really long tail thesis. I do not expect them to go $20 overnight. At the same time, I understand. I think I've been getting comments about the number of shares that they have outstanding. 4 billion shares, I believe. They are buying back shares, not at a very quick pace, but they're at least still buying back shares. Their shares in the last year have reduced, but it's basically reduced from like 4.2 billion or 4.3 billion to 4 billion. Not a huge reduction, around a 7% reduction. But I think as they continue to do that, they are going to benefit. The shareholders are going to benefit as well. As for Robinhood, I mean, I have nothing to say about Robinhood that hasn't already been covered. I think the reason why sometimes I don't cover certain companies as often, like Robinhood, right, is because I feel like a lot of them, the main bulk of the thesis was already covered. With SoFi, it was different. It was only tenor mostly at that point in time when I started covering SoFi slightly over a year ago. Yeah, it was only Tanner that was providing very good analysis. Of course, the SoFi Weekly gang as well. But in terms of like weekly videos, it was only him. And then when BMNR came out towards the end of last year, nobody was doing anything other than saying that Ethereum was going to $6,000, $7,000, $8,000, $9,000. So buy BMNR, right? And if you go back to my videos on BMNR at those times, I wasn't saying that Ethereum can get there. In fact, I was saying that at the start of the year, 4th January, I was saying that I think it's likely, and this was like before the whole Sean Farrell nonsense, right? I was saying that I was skeptical that we could get to 6,000-7,000 ETH in January. I mean, it's okay. You know what? All of us fall into this kind of traps at some point or other in our lives. Yeah. So at least for me, I enjoy doing this. This is my job. I do this so that I can tell some of my clients in Singapore what to buy, when to buy. I don't really have that many clients. Not so. Yeah. I think I've also reached the point where I need to be a little bit more picky about who I choose to work with. In my so-called day job, it's like more like a part-time job at this point. But yeah, because I think my focus or my energy is better spent on doing research and presenting these kind of cases on YouTube, and then presenting it to people that I work with on the side as well. Position sizing, yes. I mean, you know what? It was so when it comes to position sizing, I mean, everybody learns it the hard way. Yeah, as long as you understand what was your problem, that's perfectly fine. Like when my dad, I tried to teach my dad how to invest, and my dad is like, what, 67, 68 already. So when he started learning, he was learning at like 62, 63, so a couple of years ago. And he started investing in ARKK. And he knew dollar cost average, right? And to him, it's like, oh, dollar cost average. Okay, so when ARK was like what, 110, he started buying. And I didn't look at his portfolio, but he dollar cost average basically down every $5, and he ran out of money when ARK was at $90. And then ARK fell all the way to $40 over dollars. So you know what? Everybody learns. I mean, it is a trap for now, right? I think people just got in early. I have, because of the dip, I already got way too much invested into BMNR. I actually touched some of my cybersecurity money to put into BMNR. And so definitely at certain points along the way, I will begin trimming and reallocating into cybersecurity. At least for me, going into the next era of AI and things like that. Yeah, I think a lot of it has. I like to look for opportunities that haven't been priced in by the markets. Right now, I think cybersecurity haven't been priced in, especially with Claude Mythos coming out. I can't remember how to pronounce it. Claude Mythos. Claude is fantastic, by the way. Love it. If there's a sponsorship, I will take a Claude sponsorship any day of the week right now until something else better comes out. BMNR average, I believe, is around 36. Grab is what? 420? Yeah, I don't have BMNR here. This is ETH, but yeah, Grab is 420. BMNR, right? You have to look at my spreadsheet. Give me a second. Where's my spreadsheet? Wow, we've been going on for 2 hours. And you know what? I just realized the last 40 minutes we were barely talking about real investing stuff. So, you know what? You guys are a bunch of yappers as well. It's not just me. Okay, after I show this, I really got to go. I need to go and run because in Singapore, we have our, like all the guys, we have to take a physical fitness test, and I have mine in like 3 weeks. So I really need to go and run. And this is my last physical fitness test. So in Singapore, we do national service. So means we finish 2 years of mandatory army service. And then from there, we have a further 10 years. So I've just finished my 10 years. So this is actually uh, my last physical fitness test that I need to pass before yeah. Okay, so with BMNR, let me zoom it in because otherwise it's very small. Everyone in Singapore is fit. No, unfortunately, I am not as fit as I would like. I was much fitter in my 20s. I've been a little bit of a couch potato, so going to get fit this year, definitely. Okay, so you can see, basically, this is my BMNR position. Since last August, we had a lot of fun here. Technically, we had a lot of fun selling, closing, and basically, see, we received $2.89 and we closed it at 1 cent. Fantastic, right? Those were the days. Anyway, that has allowed us to earn a total of around $16,000 in premium. So my adjusted cost basis is around $35 for BMNR. I think my actual cost basis is like 38. I think it's not updated because I added more shares, but it's around 38.06 if I'm not mistaken. Yeah. But average cost basis, this is the one that I pay attention to. That's around 35.69. So as long as BMNR does that, which is exactly right at that confluence that we were talking about earlier, we should be fine. I don't think, I mean, I wouldn't know. Yeah, I really wouldn't know. It's not like the 10 years of army training is like extremely rigorous. It's the 2 years are pretty rigorous, but the 10 years is more of building camaraderie and staying in touch with your friends and having that sense of belonging and stuff like that. But it's pretty fun. Yeah. You see, Zoom and Amazon, I'm not sure where you heard that, but I heard about the Zoom exposure to Anthropic via Chris Patel. Again, you see, certain services worth paying for because it saves me time. I didn't have to do that digging myself. I have it through Amazon. I've recommended it to Amazon for most of my for most of my friends and clients, but it was the safer play. But I went for Nvidia. For those that have a bit more stomach for volatility, I told them Nvidia. Those that want more steady long term growth, Amazon. Right, but yes, this Zoom thing, I didn't even know Zoom had exposure to Anthropic. That's wild. Like Zoom is just Zoom. That is absolutely wild. But again, Chris Patel, he finds stuff that not many people find, and I think it's worth. Yeah. So I mean, I guess with that, It's been 2 hours, guys. I will see you tomorrow, same time, same place. Again, the first, I know you guys are telling me, and I appreciate it. Amit ends his stream at around 11 or so. You get more people here after that, but I'm just starting out, so I don't mind a bit smaller audience so that I can goof around, make a little bit of mistakes, and then we will see how it goes. And if you guys want to know our trend, I think I will do better at time, inserting the what do you call it, the breakdowns of each section of the chat. So I will take note of that from the next stream onwards. We will improve every single day a little bit at a time. All right, and I will see you tomorrow, same time, same place, and have a nice day.